guys, Louie here, and welcome to the weekend. I'm going to do a long form video, and we're going to review a couple of beautiful new rounds from the Germania Mint, and also first talk about inflation during the Jimmy Carter years, the years of stagflation, the years of the misery index, the years where Americans hated to be American, they were embarrassed to be American, and what happened to inflation and what happened to the price of silver during that time. So let's get going really quickly here. Jimmy Carter was elected in 1977. A lot of you know that. I actually was alive and trying to buy gasoline during his tenure, and it was not a happy event. Inflation was basically ruining our country. So let's take a walk back and see what happens during stagflation. And then, as you know, we had some news come out last week, which was very stagflationary. What that means is the economy will not be growing robustly. It may be moving sideways or slightly down. And inflation has not been tamed. It's actually looking like it's starting to rear back up again. One thing that happened, when Volcker got into office is we had double dip inflation, which meant they tried their best to contain it, failed, and then inflation took off with a vengeance. So when everyone starts recognizing that stagflation is what is currently looking to be what is going to happen to America, and you can go back and check the GDP report and the PCE report, but it's pretty widely known that the economy is cooling, perhaps because the federal government isn't spending as much or hiring as many bureaucrats. And inflation is not going down to the 2% target. Not the 2% is a magical number. Matter of fact, I think that's the degree by which the government thinks they should rob you every year of your purchasing power. And if real inflation measured the same way that they measured it in the 70s and 80s, could be double or triple that number, well, you've been to the grocery store. And you also know that their favorite measure, core inflation, excludes food and energy, the two things that are going up the most rapidly currently. So I'm going to start with the premise that inflation has not been tamed, and we are heading for another rise in inflation as the economy stalls. Okay, that is the premise, and that is pretty much what Jimmy Carter inherited when he came into office. I'm not saying that he did it, but he did not know how to fix it. And a lot of this stems back to the Nixon years and coming off the gold standard and, the Hunt brothers. There were a lot of factors at play here, but let's just look at what we have in front of us. Okay, I'm going to go first to, so we know Carter came in 1977. And here, let's see, what do I want to start with? I think I want to end with the price of silver. So now this is Volcker's term. That is kind of what happened after Carter left office. So here we have in 1979, it is the gray line where inflation is moving up from 9% upwards of 16%. Over, what is that, about a 2-year period, and then began to fall after that. Of course, it was not coming down fast enough, so the federal funds rate, which is the black line, they had to, first they escalated rates, I think up to about 17%, the Fed funds rate, and then inflation was not, you can see inflation continued to rise even though they had escalated the rates, and then they started to drop them because they thought they had beaten inflation, yet inflation kept going up. And finally, they pushed those long rates up to, about 18% federal fund rate. And that clearly took the top off inflation. And we began a period during the Reagan years where inflation dropped significantly. But I'm trying to get back here into the 70s to watch the run-up. So let's go back. Let's go back. Sorry, this chart is not the clearest, but this is the CPI going back to 1958. And here we are in 1973. CPI was 3%. And then by the time Carter was in office, it had spiked and come back down. And it was around 1977. Inflation was 5%. And by 1982, beginning of the Reagan years here, we had inflation go from 5% to 13%. Okay, so first we had a spike in 1973, and then they brought that down to 6%, and then we had a secondary spike in 1979, bringing it up to 13%. And then in the 80s, with Reaganomics and so forth, we did, and Volcker raising those rates so high. Let's see, like we saw on the previous slide, they got a handle on it. But we had a number of years here, especially during the Carter years, and that's probably why he gets blamed for it. But I would say that perpetual war prior to the Carter years and coming off the gold standard certainly had a lot to do with that. So we are still not on a gold standard. We are in a fiat-based monetary system. And we certainly like our war, which basically tends to bankrupt any company, any country that persists to wage war across the world, or fund, in our case, fund war across the world. You don't have to be shooting bullets. All you have to do is open up the printing press and let the money fly to Ukraine, Israel, other countries to perpetuate war, which they do quite readily when they're being backed by a superpower. So here we are. We are looking at inflation going from 5% in 1979 upwards of 13%. These are probably year-end numbers. They might even be averages year over year. Okay, so 13% year over year inflation in 1982, and then the top comes off. So, what happened to silver during the tepid period from 1973 up to the failure to control inflation up through the early 80s? Let's take a look at silver price. All right, so here we have this. This is a static picture here, but if we want to go back to 73, we've got silver at about $3. And then when Jimmy Carter took office, it was about $4.50. Well, you saw what happened in the run-up from 1977 upwards to 1981. Okay, now there was a recession in 1974, which probably took the top off many things. But from the Carter years, from 77, and I believe he only had one term, that would be probably through 81. I don't have it handy here. But during the Carter years, we went from 450 silver, and this is not inflation adjusted. If it was inflation adjusted, these numbers would be monumentally bigger. You know how much inflation there's been since 1977, back when a house cost, whatever, $60,000, right? And the minimum wage. Well, let's see. I was working in 1977 when I was in high school, and I think I was pulling down about $2 an hour, something like that. And now we're pushing 20. So you can agree there's at least a tenfold increase in inflation, which would take you easily into the 40s, 50s, $60 silver if we adjusted this and expected silver to keep pace with inflation. But let's use nominal numbers here in 1977. $4.50, and we monkeyed around with the economy, and we spent money, and we increased taxes, and we put on price controls, and we did everything we could except except the obvious, to raise interest rates faster, which they did not do. And then by 1980, let's go. We had a spike up to what is this, $15 silver. Okay, and then finally we had a blow off at $50. Now this is, I think, the close of the year around 35. So you can see what can happen over time with the price of silver as we enter very uncertain stagflationary period. A very uncertain stagflationary period here, and you could replace 450 with $27, I think, pretty easily. And you could also assume that we will not get our house in order because our spending is exponentially higher, our deficits are exponentially higher, and the printing is exponentially higher. So why wouldn't silver go from $27? And I'm not even going to go to 35 because the Hunt brothers were playing around in here, right? Although, are there not modern day Hunt brothers? Are there not hedge funds that would like to corner the market, at least the paper market? Are there not forces at play in other countries that would like to acquire strategic metals like copper and silver and monetary metals like gold? The writing is on the wall that this trend is headed up. And you can pick where you think it would be fair to stop this march. Would it be fair to stop it at $10 before it started to go vertical? Would it be fair to stop it at maybe $17 before the Hunt brothers really kind of went wild with their purchasing? Because they did go overboard. They were trying to buy every ounce of silver, I think. And they were actually taking physical possession and shipping it off to Switzerland, if you don't know that story. I actually have a little video I think I'll link here. I think you'll enjoy about the Hunt brothers. So you may even say, you know what, I won't take $35 silver. I won't peg $50 silver as the top, although things do tend to blow off. They overshoot on the upside and the downside. But let's just say that we go to $15 to $17 silver, right? And this is in 1977 terms. $17 silver is a quadruple from 1977, a quadruple. All right. So, I'm not going to say we're going to see $100 silver, but we should not be surprised if we see continued pressure on the price of silver and metals and miners to produce, and the need for strategic metals, and the need to build more bombs, and the need to print more money. The government may not be able to do what Volcker did because the deficits are so high. They were quite a bit lower back in the Volcker years, and he was able to actually raise the Fed rate up to, what did he get the Fed rate up to? The black line, 18%. I mean, 18% Fed rate would mean the government would have to start spending, I don't know, $1 trillion a month or something like that to service the debt. So we know we can't do that. Matter of fact, I think they will play every trick in the book to not increase the federal funds rate. They might even drop it and then start doing changes to the machinery, such as yield curve control, such as requiring pension plans to buy treasuries, maybe make it illegal to sell a treasury. I mean, I don't know what kind of stops they will put on the market. But we can't sustain an 18% federal funds rate. I doubt we could even sustain a 7% federal funds rate. So that only means that CPI or inflation will probably accelerate even faster. And then there could be a reset, and all of that could happen. But they will try very hard not to do a reset. They will try to use trickery to suppress interest rates, stimulate the economy. And if the economy is faltering in stagflation or maybe even recession, well, they'll want to cut rates even further. But how will they do that when gas prices are $5, $6, $7? Oil prices are $100, $120. I mean, we don't even have any oil in the strategic reserve. And yet the unrest in the Middle East is very, very high. and probably will explode again. And if they block the Strait of Hormuz, what do you think will happen? We'll be at war with Iran probably, or who knows? But it's got all the earmarks of expansion, of war expanding, printing expanding, and the Fed not being able to raise not being able to raise the federal funds rate. So where in this do we see? Where is the price of silver? And here it is in 1982. It was only $7. But where in this do we see silver going down substantially? Yes, there are lots of movements in the market. It can get pushed back. It can get manipulated. All that could happen. But if that means silver is going back to $15, then I'm a monkey's uncle. I don't think so. I think silver has a better chance of hitting $100 than it has of hitting $15. Now, my price target, not to pump here, is actually 35. And I think we'll linger in this 27 zone for a few weeks as gold regains its movement power, as silver regains its power given the blow off in copper, blow off top in copper, etc. And I think we're going to punch through 30 and go to 35. And then I don't know what happens to that, and I don't know how many years it will take to get to $100. But, it could be short, could be long. But I think over the next 5 years, we have a very strong chance of much higher silver prices. And I'm really not worried about buying in here if you don't have silver. Okay, or if you have a small stack and you want to grow it, and maybe you like gold better, you can tell the same story in gold. But remember, silver is an industrial metal that is needed in everything. It is strategic, although you'll never hear anybody say that. They'll talk about copper. Even the Department of Defense will talk about copper being strategic and just forget to mention silver. Right, but they come out of the ground together very often, and silver is just as strategic, if not more than copper. Not just for electric vehicles, guys, for everything we build, and for the institution of AI and computers and electric grid, the electricity grid, and yes, solar panels, which are only going to grow, even if there is a glut of them on the market right now. So I don't know. You pick your number. Will it be a double? Let's see. That if it was 450 and it went to 10, that would put us right about there on the chart, right? That would be a double. That'd be your $50 silver. Or will we get going even higher and it goes to $15 right about there? That'd be your $75 silver. And if we get going to where it closed, on the year after it hit 50 and came back down, well, that would be 35. That'd be 7 times 25. That'd be your $150 silver. And if we went to 50, well, that would be your $250 silver. Okay, but you can see how this chart moves, and I'm going to grant you, the Hunt brothers were part of this, so I'm not even going to predict the top end. But why not $100 silver? That's all I'm saying. Give it 5 years. All right, and why not $35 silver in the next 5 months? I don't see a reason. Okay, I'm going to get onto my coin review. Let's go do that. Thank you for sticking through this, and let's look at these beautiful new rounds from the Germania Mint. Thank you. All right, here we have the Valkyries series, Daughters of Odin, who follow men into war only to snatch them from death and take them up to Valhalla. Is that where they go? Yeah, to Valhalla. And what I have today is the Salvig. Sorry, I don't know how to pronounce that, but here she is, and here is the round. I guess she likes bears, huh? Ooh, let's see if we can get a better image of that. Very nice. Let's get the reverse. Okay, and this is a mintage of 25,000 pieces. Here we have the common reverse of the Valkyries series, the bicephalous eagle, and is that the wolf? I can't quite recall. It looks like a wolf. So let's read a little bit, and it comes in a beautiful blister pack here. So let's read a little bit about Solvig. Sorry for the blurriness. Third coin in the Valkyries series, and it is a coin. Oh, that's interesting. Solvig refers to the Germanic goddess and daughter of Odin, who, according to Germanic mythology, supported the bravest warriors who fell in battle. She symbolizes the summer awakening, and with her comes a new beginning. On the obverse, Solvig, the sun goddess, is accompanied by a fearless and courageous bear. The Valkyrie herself wields an axe in her hand and is clad in a leather skirt and straps that wrap around her body. She's adorned with the rune of Sowillo, a symbol of warmth and energy. The reverse is a combination of the characteristic double-headed eagle and the goddess's animal, the bear. Oh, I see. So that is a bear. I didn't realize they were individualized. Very, very nice. All right. So, and designed by, Matuzes Frakowiak. Sorry about that. Good Polish name. The coin will be issued in an edition of 25,000 pieces and will include a COA. All right. So there she is. Tell me what you think. You want to play the little video here? Let's see if we can get some action going. There's that bear. Very nice. All right. Come on, turn off. So there you have it. That is Valkyries Solvig. Number 3 in the series. All right, let's go to, now we are going to do the second new coin for 2024. Germania 2024. No, this is not a coin. This is a faux coin because there is not a mark anymore. So they've called it a coin, but it is not a coin. And I don't think they should do that. Okay, let's go on to the Golden Eagle. We have to get out of here. Kind of funny they've done that. This is the Malta Golden Eagle, €5. Oh, so this is a coin. Let me double check that. Yeah, Sovereign Malta, and I believe it says €5 on there on the bottom. I love the Knights of Armor on the Malta coins. That's a beautiful, beautiful image. Here it is for 2024, and that looks the same as 2023, I think. They look the same, so it looks like a common image. And is the mintage the same? Yeah, still, still 100,000 mintage. 100,000 mintage on that guy there, and 100,000 mintage on that guy there, but it is a sovereign coin. So quite beautiful. Quite beautiful if you're collecting this series. Looks like only the date will change. And these will be among some of the more reasonable Germania coins. Something like the Valkyries will probably cost a little bit more. And I don't believe this comes with COA because, let's see, let's get a little more information here. The eternal battle between good and evil seems to have no end. This is the theme of the first bullion from Germania Mint. The majestic golden eagle struggles against the dangerous and vicious serpent. So it is not a snake, it is a serpent, symbolizing temptation. The clash between Europe's strongest eagle and the reptile takes place against a background of sea waves. They refer to the Mediterranean Sea on which Malta is located. They refer to the Mediterranean Sea on which Malta is located, as Central Bank of Malta is the partner of the Germania Mint on this issue. Discover the high-quality premium bullion that confirms our commitment to detail and precision craftsmanship. Hopefully you got 2021, because this is their flagship sovereign coin. And hopefully you like that. But the 23s could be a good long-term hold. And this, of course, is 2024 if you're building the set. And they will come in a gorgeous capsule, as all Germania Mint products do. And hopefully the price point on this will be a little bit lower, but we'll have to see when these release. So once again, I'd like to thank the Germania Mint for providing me these I'm going to call them coins to review. I do appreciate it, and I'm glad I could bring these to you. I do want to tell you one more thing, and that is for you Germania Mint collectors, you can thank me later. But if you are looking for the Gods series, hold on, bars. Okay, I love these bars. Okay, this guy here, Baldar, sorry about that. This guy here is actually for sale. All right, and if you don't want to wait and pay, in the 200s for this bar, and I'm not saying this is a stacking bar, this is a collector bar, but if you don't want to wait and pay in the 200s, you can find Baldar, the #1 in the God series, in the 2-ounce enameled bars here, on sale at thecoinshop.ca. That's the coin shop in Canada. Okay, so if you're looking to get in on the ground floor on this series, which I think will have either 4 or 6 total releases, I don't see it here offhand. But if you're looking to get in on that early, I would expect this to be a very popular bar. And the coin shop in Canada, the coin shop, SHOPPE.ca. They do ship to the United States. They do not charge sales tax, and they're pre-selling just a handful of these right now, about $150. So there you go. If anybody takes advantage of that, please let me know. I know some of you guys just love this stuff, but not you new stackers. Don't be tempted with this, okay? All right, guys, that's all I have for you today. Again, thanks to Germania Mint for all their great products, and thank you for watching my synopsis on Stagflation. I'll see you guys later.